Hey everyone, in today's video I want to discuss the fundamentals of a small cap company that is a global leader in its niche. The interesting aspect is that the product of this company are used in three big themes. EV, which is a global theme, then smart meter, which is specific to India, where Indian government has massive plan to set up 25 crore smart meters in India, and currently there are only 1 crore smart meters. And third segment is energy storage, where power generated from renewable sources like solar, wind needs to be stored. And company name is Shivalik Bimetal. Currently just a 3000 odd crore company, but has a leadership in its niche not only in India but globally. So in this video we'll understand company's business model. It's a bit complicated, so I've tried to simplify it as much as possible. Then we'll focus on the moat of the company, because that would help you get a clear picture on its growth potential. Then we'll look at the future opportunities along with financials, and we'll also cover key risk in the growth thesis. Interestingly, it's been a year since company share price is consolidating. So we'll understand the reason for it and figure out if it is a good time to invest or not. But before we begin, a disclaimer that this video is only for education purpose. Make sure that you do your own research before investing your money. Alright, let's get started. Established in 1984, Shivalik Bimetal specializes in joining metals to manufacture precision components that find usage in various high growth sectors. Basically, it takes two pieces of metal and weld them together using various welding technologies. That's why it's called bimetal. Now, these bimetal find usage in shunt resistors that are used for measuring current. While it looked like a very small component, today all sophisticated electronic devices need to measure current passing through them in order to control the flow of that current. And that's where shunt resistors come into picture that find usage in multiple sectors. So first sector is smart meters. These shunt resistors are used for accurate monitoring and control of energy consumption in smart meters. And smart meters are one of the fast growing segments in India, where Indian government has a target of installing 25 crore smart meter in Indian household, and today there are only 1 crore installation. So there's a long way to go. Then second segment is EV. Shunt resistors are used in EV cars within battery management for current sensing and monitoring for the charging and discharging of batteries. Now, electric vehicle is again a huge market, as 21st century is all about electric vehicle car. Although these shunt resistors are also used in petrol diesel vehicle for starter motors, sensors, power steering, but in addition to all these, shunt resistors would also be used in battery management system that is specific to EV vehicle. By the way, the value of battery management shunt is 3 times the normal shunt. This picture shows the usage of shunt resistor in automobile. So it's not just limited to battery management, but used in multiple segments. Apart from shunt resistor, Shivalik Bimetal also manufacture electrical products like thermostatic bimetal, silver contacts, thermal protector and current sensor that are designed to withstand high current, offer precise measuring capabilities and provide reliable circuit protection. And that's where they are used in switch gears. Apart from this, they also find usage in power storage module, that is UPS. Basically, the power generated through renewable sources like solar, wind is stored in power storage module, and that's where Shivalik products like current sensor and electrical contacts are critical in ensuring the efficient and safe operation of these renewable energy system and power storage modules. So if I quickly summarize the business breakup of Shivalik Bimetal, in FY23, company did a revenue of 470 crore, out of which 210 crore was for shunt, 210 crore for bimetal, and remaining 50 crore is for electrical and silver contact. As far as end user industry is concerned, shunt resistors find usage in battery management system, for electric vehicles, smart meter, UPS inverter, and so on. Then bimetal resistor and electrical contact find usage in switch gears, gas meter, domestic appliances, and various industries. This picture gives a good idea about the global addressable market for Shivalik. It was $1.2 billion in 2022, which is expected to grow to $2.4 billion by FY30. Within this, shunt resistor is the fastest growing segment with 14% CAGR growth. Thermostatic bimetal and electrical contact are expected to grow at 7% CAGR. If you look at end industry market, EV and energy storage are exponential growth market, followed with electrical appliances, smart meter, medical devices, switch gears. Now, end usage gives you a good picture in terms of growth potential, but the key question you should ask is, what is the moat of the company? Because that will help you understand how sustainable the growth is. And is it possible for anyone to make these shunts and bimetal? What makes Shivalik unique? Let's have a look. So friends, before I invest in any business, the first thing I try to understand the moat of the company. Or in other words, its competitive advantage. Because that's the most important factor in deciding the future growth potential. In fact, in my personal portfolio also, I've invested based on this competitive advantage. I share my personal investment in an exclusive community of long-term investors via my weekly video series that include one exclusive video every week. I also share Excel sheet with quarter result analysis along with top conviction ideas. In case you are interested, you can explore the detail on my website or via the join button. Now coming to Shivalik Bimetal Moat, first of all, please note that these shunts are low value product. They are exported in tons. The key differentiation comes with the quality of shunt. One of the technology used for making these shunt is electron beam welding. Now what is it? So it's a fusion welding process whereby electrons are generated by an electron gun and accelerated to high speed using electrical fields. This high-speed stream of electron is tightly focused using magnetic field and applied to the materials to be joined. The beam of electron creates kinetic heat as it impacts with the workpieces, causing them to melt and bond together. In short, it is a very precise technique and there are only 4 players in the world who can manufacture low-ohmic shunts using electron beam welding technology. Shivalik has one of the largest capacity in the world for electron beam welding with 8 machines, each costing around 20 crore rupees today. These machines are further customized and optimized in-house to yield maximum productivity. Apart from this, Shivalik also uses diffusion bonding technology to manufacture customized product for their customer. Around 75% of Shivalik products are custom designed, giving customer much needed flexibility to address their specific requirement and preferences. So Shivalik Moat is the specialized technology with more than 35 years of experience with in-house R&D with maximum productivity. In fact, Shivalik shunt resistors are supplied to OEMs like Tesla and BYD. Although today Shivalik is the tier 3 supplier in the value chain, where it supplies product to tier 2 players in that supply chain that supplies to tier 1 player who directly deal with Tesla, BYD and so on. Now the next question is, how is the entry barrier in the sector? Can OEMs like Tesla, BYD or let's say tier 1 or tier 2 players can directly manufacture these shunts? Well, of course they can, but they are not doing it. The reason is because these shunts constitute of very minute fraction of overall product. For instance, a $10,000 car may require shunt worth $10. So it does not make sense for OEM to manufacture them and better to outsource it. Moreover, as discussed earlier, it's not that easy to manufacture high quality shunt because the product used in the EV battery system or smart meter are not just for a few years. They should be lasted for many years. As a result, company enjoys high level of client stickiness. And that's the reason companies enjoy 12 to 13% market share in the world in shunt and aim to increase it to 17-18%. In bimetal, companies enjoy 16% market share in the world and intend to grow it to 22%. In India itself, it enjoys 85 to 90% market in bimetal. Now, some of the clients of Shivalik include your Vishay, then Schneider Electric, Continental, Havells, Siemens, Genus Power, HP Electric, Tata, so on. The credit for company's success goes to its leadership, which is again a key moat of the company. So it was started by first generation entrepreneur Mr. S.S. Sandhu and N.S. Guman. Mr. Sandhu is the chairman of the company with 51 years of experience and Mr. Guman is MD with 50 years of experience with BTech in mechanical engineering. And now company has second generation entrepreneur Mr. Kabir Guman, Kanav Anand, Sumer Guman and Rajiv Ranjan. So a good mix of experience of first generation with second generation taking the company's growth forward. Another very interesting aspect is during FY 21 to 23, company incurred a capex of 100 crore and company management has guided that company can grow its top line from 470 crore in FY 23 to 1600 crore without doing any major capex. So that would increase company's asset turnover from 2.78 times to 8 times in future. If you look at company's revenue breakup by geography, it exports product to 38 plus countries and 65% business comes from export and 35% from domestic market. I hope you got a fair idea of company's business, the key growth opportunity and the key moat. As discussed, the opportunity for the company is huge, especially in EV battery management space, smart meter, switch gears. Apart from this, company is also planning to forward integrate into current sensing module that can increase their value addition by 5 times. Then Shivalik played a significant role in Europe's 5G rollout. It will be interesting to see if Indian 5G network rollout would see a spurt in demand for company shunt or not. Then traditionally shunts were used in EV passenger vehicle. However, company has recently announced the approval for integration with Ola's two-wheeler bike. So this can be a big opportunity ahead. Lastly, company intend to move up the value chain. As I've shown the image earlier, company is currently tier 3 supplier that supply product to tier 2 player who distribute product to BMS vendors and OEMs. However, Shivalik is currently in the process of reshaping its position within the supply chain by collaborating directly with global tier 1 EV OEMs. This can help in improving company's margin in the future. Moreover, the opportunity for company is not just limited to electrification. Company can harness growth in defense, medical segment as well. Now let us look at the financials of the company. Historically, company sales had grown from 76 crore all the way to 505 crore. Look at the consistency in growth. Year on year, company has delivered good performance. Company's margins have also consistently improved from mid-teens to now in 20s. And company's net profits have grown from single digit all the way to now at 80 crore. Again, a consistent growth. Overall, company's both top line and bottom line has grown at a very good rate. Company is generating cash from operation except for FY22. Operating on a very high profitability with ROE of 35%, ROC of 38% and has debt to equity of 0.14. So very solid set of financial with excellent growth which is pretty much reflected in the share price as well. Company share price zoomed from 3 rupee to 90 rupee between 2014 to 18. However, it corrected when the entire broader market fell down, but then it again zoomed significantly. However, it's been 1 year since the share price has been consolidating. This is after a significant jump during COVID period. The question is, why is the share price consolidating for the last 1 year? So two reasons. First is slowdown in North American market and second is softness in commodity market. Overall, the recovery is expected in Q2 of FY25. But still management has guided for around 20% growth. If the market recovers, the growth can be as high as 30-35%. But we have to wait and watch. As of today, company is trading at around 550 rupee, command a market cap of around 3000 crore with a P ratio of 42. So valuations are decent considering the growth potential. Now before we close this video, let us look at the key risk. So first risk is client concentration risk. Top 5 customer form 40% of company's business in shunt register. For bimetal, top 5 customer form 30% of the business. Any loss in major customer could potentially have a downside on company's revenue. Shivalik is trying to address this risk by diversifying the customer base by focusing on innovation and product expansion. Second risk is raw material price risk. Company's business require raw material like copper, manganese, nickel, which is 50% of company's total cost. Any volatility in raw material price can impact company's margin. Although there are clauses with clients to adjust pricing, but some level of volatility is absorbed by the company. Then third risk is margin volatility. Before COVID, Shivalik Bimetal had commanded 16 to 18% kind of margin. However, during COVID, due to peak demand, company's margin jumped to peak of 23%. Now, due to current slowdown, company's margins have fallen to 20% in December quarter. So we need to keep a close eye on the margin. Then fourth risk is technology substitution. So shunts are an alternate current sensing technology to Hall effect sensors that are also used by some clients. But it is currently more expensive than shunts and reportedly less suitable for high temperature application. However, advancement in Hall effect sensors in terms of costing or application could result in threat to shunts. Then fifth risk is competition risk. Although Shivalik enjoys a strong dominance in the field, the attractiveness of the market can result in tier 1 or 2 player to backward integrate with shunt manufacturing or other players in the sector to expand into shunt manufacturing that could pose a threat to the company. Last risk is that company has got 3 manufacturing plants and all of them are in Solan, Himachal. So any problem in the area can impact company's business. So in this video, we discuss the fundamentals of Shivalik Bimetal, which is among global leader in shunt register and bimetal segment that can find usage in high growth sector like EV, energy storage, smart meters, switchgear, and many other fields like defense, medical, and so on. We discussed the key moat of the company, that is the precision technique to manufacture high quality shunts using electron beam welding technology, where there are only 4 players in the world today. Company is a very solid leadership team with solid financial background. Considering the immense growth potential in the end industry, Shivalik Bimetal can potentially be a big beneficiary of this growth opportunity. It's a small cap company with a market cap of about 3000 crore, trading at a P ratio of around 42. Its share price has been consolidating for almost a year now due to ongoing slowdown in North America and softness in commodity market. We also discussed the key risks that you must keep in mind. I hope this video would give you a good idea about this interesting small cap company having a leadership in niche business segment. Now you can take this video as a reference to do your own research and tell me in the comment, what do you think about Shivalik Bimetal? Is it worth investing your money or not? I hope you'll find this video useful. I'll see you next video. Till then, take care.